Welcome back everybody to part 2 of the Keep It Simple series. Now of course if you haven't seen part 1, I highly recommend you go back and check that out. You can find that in the description below and on our YouTube homepage. This series is focusing on bringing everyday traders like you and all of the people that you know that trade on a regular basis. Whether you're consistent, whether you're learning, whether you're brand new, this is all about keeping you in the real world. Now, what do we mean by that? Well, what we mean by keeping it simple is focusing on the core attributes that we actually need to follow within trading. Now, some of you may think, why is it that there is a guy standing on a pile of money on the thumbnail and on my screen right now? Well, this is pretty symbolic because the whole principle behind this series is to follow the true market moving money and to follow the true higher time frame investment, which are always going to be large quantities. Now, because of this, we can understand that there are going to be times where large money isn't necessarily involved completely. They're partially involved. They're teasing you, they're testing the waters, if you were. And these are times when traders still try and follow the principles that they see within high volume markets, and the outcome is often very different. What is the principle? What is this symbolic of? What does this dude right here really represent? Well, this figure, or this character, if you were, represents the institutional banking system. And the money that he holds in his hands and that he stands on comes into the market in huge quantities. Again, we discussed the scale of these quantities and the size of these quantities in the last video, which was part 1. But today we're really going to begin to open your eyes into the idea of what it is that you will see when big money and true investment money is in the market. Now remember, there is one thing that our dude over here is interested in doing, and it is either buying or selling. These guys want to either be making money through gathering potential positions or selling off pre-acquired position. It is always going to be focused on the money. Due to the vast majority of traders focusing on what we call structure and overall the elements of price that are created by one of these movements, you can sometimes find yourself on the wrong side of price action when the whole reason the structures you're tracking have been created are because a move is preparing to give you something that you weren't necessarily anticipating. Now again, we've said this before, it doesn't mean that we have to be correct every single time. It doesn't mean that we have to follow the same basis and be 100% accurate. But the principle is, unless we can confirm big money buys or big money sells, this dude over here is probably sitting on a beach with a pina colada in his hand, not even interested in gathering or selling any of the major positions that he holds. Now, of course, this is going to be completely subjective due to the principle of time frame. Your time frame and your overall input within the market is going to determine when you would class it as relevant or non-relevant. The main principle I want you guys to focus on is what is it that this guy cannot do in the market when it comes to the money they invest? What is it that they cannot do without us being able to see it? Well, that is leave a clear indication. Leave, as we spoke about before, a clear directional movement, which generally will have a form of inefficiency within it, to show us that there is potentially big money stepping into this. Big money stepping into the market that we are looking to sell or buy. This is a very, very simple principle that we need to really remember and stick to. So how are we going to do this? I invite all of you to remember these key elements whenever you are looking at a market. We always have an area where investment starts. You can call it the origin, you can call it the base, you can call it the high, you can call it the low, whatever you want to call it. but there is going to be the root of a movement. Now, this overall movement itself is in turn going to project some form of market movement. Okay. Now, whether it has the conditions that we're looking for or a trade that you want to see, you know, whatever it may be, it's always going to do one thing, and that is move in a given direction. Now, in this example, we are showing you upside. But it's not about the overall direction that price moves in. It's about the way it moves. If we place an investment right here and then we place a profit taking area right here, again, it's irrelevant what pricing this is or what this represents overall. It's a case of where can we pick up on these signals that the big money investors are actually showing us, rather than what is structure telling us or what is the market itself trying to tell us. Where is big money involved? They're the questions we need to be asking ourselves. So what we're going to see generally from these areas, when we start to see a projection, you are generally going to see a space open up within the market. Now, this space can be called an imbalance, it can be called a fair value gap, it can be called whatever you like to call it. The principle of this is to tell you that there is a clear inconsistency in the 1-to-1 ratio of buying to selling, which most of the time, 95 to 99% of the time, can only be caused by our big money man that we spoke about at the beginning. Following this, there is a high probability we are going to see a progressional move higher, so in the direction of that space being opened up. And most of the time, again, we're going to add more context to this as we go through this series, and we're going to actually show you in full. The more you push away from the area, the more likely you are to create a space going against the overall bias in price, and then we will see a movement down. Now, of course, we can chop these into two overall labelings. So this would be trending, this would be pullback. This is, of course, going to be subjective depending on your higher time frame bias. This is something that we're going to look into again, the latter half of this series. The principle here is the main signal for your big money man to be stepping into the market is an inconsistency between the 1-to-1 market relationship, which is buy and sell. When we see these spaces open up and it shows that there is a sell side inconsistency or a buy side inconsistency, this as a whole is our signal to tell us that the larger money is stepping into the game here. Of course, this is a super simple principle, but just using this principle, I highly recommend you go to your hourly time frame, 15-minute time frame, daily, whatever you want, and have a look at this principle and play, and I promise you will begin to notice something that you did not see before. So guys, that wraps it up for part 2 of Keep It Simple. Part 3 will be coming this week. There will be 5 parts to this series. By part 5, we'll be showing you a complete system that you can use on a daily basis, which ultimately will give you the freedom in between big money shifts to do what you would like to do in life. Time freedom, giving you that freedom to do what you want to do. So if you have enjoyed this video, guys, please do drop us a like and a comment. Until episode 3, guys, stay safe and stick to your trading plan.